So one other thing that we haven't talked about yet is interest rates. Couple thoughts there, and then I'll let you take it. But one thing was, if we go back a year ago, right, rates had gone up substantially. They fell a lot over the course of 2019. So I'd like to know, where you see rates right now, where you think they're going, in the short term. None of us have a crystal ball. And then as a follow-up to that is refinances. With rates being low, what time periods, if someone bought a property over the past 5-10 years and maybe they were going to consider a sale, but it might not be the right time, but they need to free up some equity, who should be considering a refinance based on where the rates are today?
Sure. Yeah. So 30-year rates, conventional loans, jumbo loans are teetering between about 3.625 and 3.875 on any given day for good credit scores, which is incredible historically and just in general. 15-year rates are closer to 3. 20-year rates are right in the middle. Government-backed loans, FHA, VA loans are even lower than that. 30-year rates are around 3.5 or lower. So it's a pretty incredible opportunity for people. A good way to think about that is if somebody were buying a house, a lot of times I have people that tell me they want to wait because they think prices are dropping. Buy a $400,000 house today with 3.5 rates, it's the same as buying a $450,000 house when rates tick up a little bit.
Sure.
Or rather, it's the same as buying a $360,000 house with the higher rate.
Yes,
so
absolutely.
basically the rate offsets about 10% of price.
Sure.
Okay, and then from there, we've had an influx of refinancing over the last 12 months, really over the last 6 or 7 months. Anyone that's bought a home in the last 3 years should have their statements. Yeah, rates have dropped considerably since Brexit, which was around, that was like mid-2016 or end of 2016. And so I've talked to a lot of folks that we even put into loans 12, 18 months ago.
Sure, when those rates were high again.
It went from 4.5 to 3.5, 4.75 to 3.75. Generally for a 30-year fixed loan, you want to save about 3/4 to a point in rate. The bigger the loan amount, the easier it is to recapture the savings. The smaller the loan amount, you really need a bigger rate drop.
Sure.
So your $300,000, $400,000, $500,000 borrowers could definitely benefit from a refi with about a 1/2 to a 3/4 drop in rate. Versus say a $150,000 loan where you really need a bigger savings. What I've actually seen a lot more of are people who are going from 30 to 15.
Okay, sure.
So the person that's actually staying put is going long their house, right?
Amortizing down that basis a lot faster with this roughly the same monthly payment.
And it's a good hedge against properties potentially decreasing.
Sure.
So if you're paying into a 15, you're offsetting the property decrease because you're building equity faster, you're paying less interest. So you get back a guaranteed investment when there's not many of those out there right now.
That's great. So a lot of interesting things going on in the market right now. Got loan limits going up. We've got rates historically very, very
easier
low.
to qualify, a little more predictable.
A little bit more predictable process for getting qualified, and a little bit of a opening up there for people, maybe some programs that offer for different credit. So as prices continue to slowly go up and the market is stabilizing now, there's still a lot of opportunity for people to buy. And if you're considering a sale or a refinance, there's a lot of opportunity there as well.